Welcome back to Top Notch Lectures. In this video, we shall now start with the business economics, which pertains to CA Foundation and CMA Foundation. Let's go into the video. Business economics. In life, everyone wants an infinite number of things, but we only have finite resources to acquire what we want. Maintaining an efficient balance between these unlimited wants and limited resources is what business economics deals with. Before understanding the meaning of business economics, we shall start with what economics is about. So, this term is derived from a Greek word, oikonomia. It means household management in English. So, economics is about when we are evaluating the interest rates on our credit cards or trying to decide whether to buy or lease a new car or go out to a dinner or on vacation. These are all the decisions we make using economic thinking. We live in a world of limited resources, and economics help us to decide how to use these limited inputs to satisfy our never-ending list of wants and needs. So this economics is the father of the economics is Adam Smith. So he is a Scottish social philosopher and a political economist. He is the father of the economics. The meaning of economics is given below. So this is a study of how society uses its limited resources, as how I was explaining it before. And it is a social science that deals with the production, distribution and consumption of goods and services, where human wants are unlimited. So the main subject of matter deals with this, and to satisfy these wants, there are many relatively scarce resources are available. So about this economics, Adam Smith has defined that it as a science of wealth in his book An Enquiry into the Nature and Causes of Wealth of the Nation in 1776. This book has been released in the same year, and Adam Smith has released, and he says that the main objective of the human activity is the acquisition and attainment of wealth, and economics deals with acquisition, accumulation and expenditure of wealth. So generally it speaks only about wealth. So wealth definition signifies by Adam Smith. And again a welfare definition has been given by another famous economist named Alfred Marshall in his book Principles of Economics. So this has been published in the year 1890. So here in the welfare definition, the Marshall has defined economics as about wealth is a mean and welfare is an end. So this is what about economics is. And here this economics is split into the following two broad categories, that is microeconomics and macroeconomics. We shall now see what microeconomics is about. So here microeconomics, usually this is what it studies about how households and business reach decisions about purchasing, setting prices, saving, competition in business, etc. Generally, it focuses at the individual level. So the microeconomics deal everything about the individual level. Let us start with an example like renting an apartment. Now, to rent an apartment, first you must determine a budget. For this, you have to take into account your income and how much money you are looking to spend on housing in such a way as to maximize your utility or satisfaction. So when you allocate too much of your income to rent, you will not have a lot of money left for other expenses. Thus, you will have to decide what is the most amount of money you are willing to part with. What amenities you must have in your apartment and acceptable neighborhoods. It is what about maximizing the utility. So this is what about macroeconomics. From an individual perspective, economics frames many choices we make we have to make about work, leisure, consumption and how much to save. As already said in the macroeconomics. Our life are also influenced by macroeconomic trends such as inflation, interest rate and economic growth. That is here macroeconomics. It studies about the overall working of a national economy. It is more focused on a big picture and analyzing things such as growth, inflation, interest rates, unemployment and taxes, etc. Here, this is what the meaning about the macroeconomics is. And here's an example as given for study of unemployment. See, the study of unemployment is a broad category where in India, the unemployment rates are higher as it is compared with the other countries. So this can be a good example for a macroeconomics. Here I have given some differences between macro and microeconomics. So this microeconomics, it studies about the behavior of the individual and organization within the economic system. And in macroeconomics, it studies as a whole. So it has a few differences which I have already discussed about what microeconomics and macroeconomics is. Usually in macroeconomics, it involves the study of aggregate factors such as employment, inflation, gross domestic product, and evaluating how they influence the economy as a whole. And also the macroeconomics means it's a portion of economics which is focused on the large scale or a general economic factors like production, employment levels, inflation. Again and again, the inflation level, employment level, everything has come apart. And it is a microscopic study, and here it is a telescopic study. Means it studies as a whole and it studies in a narrow level. So this is what the difference between the micro and macroeconomics is. And the next topic is, now we will start what business economics is about. So this business economics definition has been prescribed by ICAI and CMA. So this you can write for the examination point of view. And generally, business economics deals with the application of economic principles and theories to the problems of business firms. The nature of business economics is microeconomics. That is, generally a basic definition of microeconomics is the study of how an individual, whether it is a single person or business, decides how to allocate the resources and the interaction that occurs between those individuals or business. It is more about the single factors. The same has been defined in the business economics. So here are the two definitions prescribed by the ICAI and CMA. So this can be used for definition purpose. And I will just read the definition. Joel Dean. The purpose of managerial economics is to show how economic analysis can be used in formulating business policies. So here the business economics are also called as managerial economics. Then M.H. Spencer and L. Seligman defines business economics as managerial economics is the integration of economic theory with business practice for the purpose of facilitating decision making and forward planning. So from these two definitions, we can conclude that the business economics is a branch of knowledge in which theories of economic analysis are used for solving business management problems and determination of the business policies. So generally it serves as a bridge between economics and the business management. Nature of business economics. So generally the nature of business economics deals with, it can be a science or as an art. It may be a normative or may be a positive. So this can be explained detailedly. So when we say about economics as a science, it is broadly categorized as positive economics and normative economics. So here positive economics means, see, when we are studying a problem and its related issues which are subject to verification, like the extent of poverty and unemployment, we are referring to positive economic. While in normative economics, we are offering suggestion to solve the problems, like which are not subject to verification. Example, the suggestion of reservation in jobs to solve the problem of poverty. So this can be taken as an example for a normative economics. So here it refers to a normative economics generally. Then the positive economic statement can be described as what was it will be, or what is and what would be. So under the given set of circumstances. In normative economics, generally describes what ought to be. Its objective is to determine norms or aims. So in positive economics, all these statements are capable of empirical verification, on the basis of which degree of truth can be found. So generally it is based on the fact here. And in normative economics, these are the opinions relating to right or wrong of a particular policy matter and are always a matter of debate. Generally it is based on the ethical value. So finally, the main objective of the positive economics is to establish, and here is to determination. Scope of business economics. The first point is demand analysis and forecasting. Like if demand forecasting of a firm is correct, the firm earns more profit, and if they are wrong, it suffers more losses. The next point, production and cost analysis. Generally, every firm is engaged in certain production, hence it has to plan and manage the production. Firm has to make profitable decisions, keeping its factor of production and the product in view. The next point, inventory management. That is, it helps in analysis of profit measurement and control. So, it includes cost of capital, profitability of the capital, and the selection of the suitable project out of the various projects. Market structure and pricing policies. So while deciding the price, it is one of the important subject of business economics here. The success of every firm, it depends upon the decision regarding the price. So it's a main scope of the business economics. Resource allocation. So resource allocation. So one of the most important responsibility of a business management is to analyze and control the investment decisions in order to maximize its profit. So it can be done only by the proper investigation and research about the respective cost. The next is theory of investment decisions. So the main point is the investment decisions has to be analyzed and critically has to be checked over in the market, and we have to decide as per it. Then profit analysis. So generally it helps in the profit measurement and control, as I already said. The last point is risk and uncertainty analysis. Uncertainties are many-fold as such: uncertainty of demand, uncertainty of cost, uncertainty of capital, etc. Many statistical methods are developed for taking decisions under condition of such uncertainties. So this is what about scope of business economics is. Hope you guys are clear with this video. In the next video, we shall have a clear explanation about nature and scope of business economics. Kindly subscribe and click on the bell icon for further notification. Meet you in the next video.